Welcome to the deep dive. Today, we're diving into the world of JB Chemicals and Pharmaceuticals.
Oh, interesting.
You send over their Q2 FY25 financials and investor presentation,
Okay.
and some really, really interesting questions.
All right.
So let's get right to it.
Having those different sources really gives us a much more complete picture.
Exactly. And let me tell you,
Yeah.
there are some exciting things happening here.
Oh,
For starters, JB Chemicals just crossed
they?
1,000 crore in revenue
Wow.
for the second quarter in a row.
Okay.
Plus, they're growing at a rate almost twice as fast as the overall Indian pharmaceutical market.
Interesting.
It's like they've cracked some secret code or something.
Well, what's fascinating is that they're not just growing.
Right.
They're doing it strategically.
Okay.
5 acquisitions in just 2 years. That's a clear sign.
Yeah.
They have a big plan in motion.
They're not messing around.
No.
Let's unpack their recent performance.
Okay.
Starting with the big picture,
Right.
their Q2 was strong, and their half-year numbers are even more impressive.
Okay.
They reported a 13% year-over-year revenue growth,
Right.
hitting 1,001 crore in Q2 alone.
Wow.
Plus, their operating EBITDA margin,
Uh-huh.
which essentially measures how efficiently they're turning revenue into profit,
Right.
is at a healthy 28.4%.
So that high margin is a key indicator of their profitability
Yes,
and efficiency.
exactly.
It shows they're keeping a good chunk of every rupee they earn
Yeah.
after covering their operating expenses.
Mhm.
And for a company expanding as rapidly as JB Chemicals,
Yeah.
that's a really good sign.
So what does this mean for you?
Mm.
Well, it signals that JB Chemicals is a company on the move,
Right.
making smart choices
Right.
and reaping the rewards.
Yes.
But here's where it gets really interesting.
Oh.
Their domestic performance is absolutely stellar.
They are crushing it in the Indian market.
I know.
22% year-over-year growth in domestic formulation
Right.
brings them to 588 crore, which is nearly twice the pace of the overall market.
It's incredible. Their domestic business now accounts for a whopping 59% of their total revenue.
Wow.
They're clearly in tune with what Indian consumers need
Yeah.
and are delivering it effectively.
Connecting this to the bigger picture,
Yeah.
we see a company that's not just riding the wave of industry growth,
Right.
but they're creating their own momentum. And a lot of that momentum comes from their strategic acquisitions,
Right.
especially in the ophthalmology space.
Ah, yes, the ophthalmology portfolio.
Right.
Remember they acquired that from Novartis back in January 2024?
Yeah.
And it's really starting to pay off.
Okay.
We're seeing a surge in sales,
Uh-huh.
reaching 57 crore in Q2 FY25.
Okay.
That's a 19% jump from just the previous quarter.
They clearly know how to integrate and scale acquired brands, turning them into growth engines.
Right.
Their dedicated field force of over 100 people promoting these brands is no doubt a big factor in this success.
Absolutely. It shows they're putting their money where their mouth is.
Yeah.
Another example of this successful integration
Okay.
is their Sporlac franchise.
Okay.
They acquired that brand back in 2022,
Uh-huh.
and look at it now.
It's grown from 83 crore in MAT September 2022
Right?
to 137 crore in MAT September 2024.
Wow.
Demonstrating their skill at leveraging their existing infrastructure and expertise
Yes.
to make these acquisitions flourish.
It's incredible how quickly they've been able to turn these brands around.
Yeah.
This is a key takeaway for you.
Okay.
JB Chemicals understands how to extract value from its investments.
Mm-hmm.
They're bold, but also smart about how they execute their vision.
Right.
Now, let's zoom out a bit and look at their international performance.
Okay.
Their international business saw a 3% growth this quarter,
Right.
reaching 413 crore,
Okay.
with their formulations business leading the charge,
Mm-hmm.
up 14% to 300 crore.
While the overall international growth might appear modest, it's important to remember this includes their CDMO division.
Right.
This division, which focuses on contract development and manufacturing,
Yeah,
experienced a slight dip in the first half of FY25.
that's right. But don't worry.
Oh, okay.
They're expecting a strong second half of the year,
Right.
and they have a solid order book to support that claim.
Based on their track record,
Yeah.
I'm inclined to believe them.
Mm-hmm.
They seem adept at navigating market fluctuations.
Right.
and optimizing their different divisions.
Speaking of navigating,
Okay.
let's talk about their efforts in sustainability.
All right.
It's clear JB Chemicals isn't just about financial growth.
Yeah.
They're also committed to creating a more sustainable future.
Absolutely.
Their recent publication of their third sustainability report
Yeah.
with second-party assurance
Okay.
underscores that commitment.
Okay.
And they're not just talking the talk.
Yeah.
They're aiming to rely on renewable energy for 40% of their power by FY27
Wow.
and 100% by FY33.
That's ambitious.
It shows they're serious about making a positive environmental impact.
Their sustainability efforts are certainly noteworthy.
Right.
And for you, it means they're a company thinking long-term.
Yes.
They're not just chasing short-term profits.
Yeah, exactly.
They're building a business that's both profitable and responsible.
Now let's turn our attention to their brand portfolio.
All right.
JB Chemicals is not just about numbers. They have a powerful set of brands driving their success.
You're right.
They already have 5 brands in the top 150 in the Indian pharmaceutical market,
Okay.
which contribute to over 50% of their domestic revenue.
That's a strong base to build upon.
And those brands are only getting bigger.
Really?
Take their Silicar franchise, for example.
Okay.
It's gone from 390 crore in September 2021 to a whopping 719 crore in September 2024.
That kind of growth trajectory is remarkable.
It is.
It shows their skill at crafting brands that resonate with consumers.
Yes.
They're building brands with staying power, not just launching products and hoping for the best.
So to sum it up,
Okay.
JB Chemicals is firing on all cylinders.
Mm-hmm.
Strong financials,
Yep.
impressive domestic growth, smart acquisitions,
Right.
a commitment to sustainability,
Yes.
and a powerhouse portfolio of brands.
Okay.
They seem to have it all.
They're certainly a company with a compelling story.
They are.
But this raises an important question.
Mm.
Given their focus on the high-growth chronic therapies market, what might their next move be? Could we see acquisitions or partnerships that further accelerate their already impressive trajectory?
That's a great question. JB Chemicals is definitely a company to watch.
I agree.
And it'll be fascinating to see what they do next.
Yes.
But before we get ahead of ourselves,
What?
let's dig into some of those specific questions you sent over.
Right.
Because there are some really interesting details to unpack.
Sure.
So stay tuned.
I will. Their focus on chronic therapies is indeed a smart move, especially when you consider the rising global demand for medications that manage these conditions.
That's right.
Chronic diseases like hypertension, diabetes, and cardiovascular disease are unfortunately on the rise.
Yeah.
And these conditions require ongoing treatment,
Right.
sometimes even lifelong. This creates a stable and predictable revenue stream for pharmaceutical companies that can effectively cater to this market.
Exactly. And JB Chemicals seems to be doing just that. Their cardiac portfolio, for example, features a mix of well-established mega brands and newer emerging brands.
Interesting.
It's clear they've built a strong presence in this segment.
Yeah.
And they're only gaining momentum.
You've hit the nail on the head. They've managed to climb to the number 8 position.
Wow.
In the cardiac segment of the Indian pharmaceutical market.
Okay.
Up from number 15 just a few years ago.
That's a huge leap in a relatively short amount of time.
Absolutely. It's a testament to their strategic focus and their ability to execute their plans effectively. But, every success story has its potential challenges.
Right.
Curious.
Yeah.
Are there any areas where they might be facing some headwinds? Or perhaps a segment where they're still the underdog, but have a chance to really shine?
That's a great question.
Yeah.
And it brings us to their international CDMO business.
Okay.
Well, they're a leading player in the lozenges market. This division has encountered some challenges recently.
You're right. Their CDMO business has been a bit muted lately.
Right.
Mainly due to some material availability issues.
Okay.
That pushed sales into the latter half of FY25. Essentially, they haven't been able to get their hands on all the materials they need to manufacture their products at the pace they'd like.
It sounds like a frustrating situation.
It is.
But they're still confident in their full-year outlook.
Okay.
And have a strong order book to back that up.
Their confidence is encouraging.
Yeah.
And their solid reputation and customer base. It's just they're well-positioned to overcome these hurdles.
Right.
It'll be interesting to see how they navigate these supply chain issues. And capitalize on that anticipated rebound in demand.
It sounds like we'll need to keep an eye on that.
We will.
From your perspective.
Yeah.
What are some of the key factors
Okay.
that will determine JB Chemical's continued success
Mhm.
in the coming years?
That's a great question.
Yeah,
And it's multifaceted,
right.
but I can certainly point to a few key areas.
Okay.
Firstly, their ability to successfully integrate and scale any future acquisitions
Okay.
will be crucial.
Right.
They've proven they can do it,
Yeah.
but they need to maintain that momentum
Mm-hmm.
as they continue to expand.
I see what you mean.
Yeah.
Their recent track record is impressive,
Right.
but we all know past performance isn't always a guarantee of future results.
That's true.
They'll need to be incredibly diligent and strategic
Yeah.
about the companies and brands they choose to acquire.
Couldn't agree more.
Secondly, their ability to adapt to the ever-evolving regulatory landscape will be essential.
Okay.
The pharmaceutical industry is highly regulated,
Yeah.
and any changes in regulations can significantly impact a company's bottom line.
Right.
JB Chemicals will need to stay ahead of the curve
Mm-hmm.
and ensure they remain compliant with all the rules and regulations.
That's a great point.
Yeah.
The regulatory landscape can be complex, and it's constantly shifting.
Right.
Companies that can navigate those changes effectively will undoubtedly have a significant advantage.
Absolutely.
Right.
And thirdly, their ability to foster innovation will be critical.
Okay.
The pharmaceutical industry thrives on new discoveries and advancements in science.
Yeah.
JB Chemicals needs to invest in research and development to stay competitive and bring new products to market that meet the evolving needs of patients.
You've highlighted three essential elements.
Yes.
Acquisitions, regulations, and innovation.
Right.
They have a strong foundation.
But to maintain their upward trajectory,
Yeah.
they need to be agile, strategic, and innovative.
Precisely. They also need to keep a close eye on their competitors.
Right.
The Indian pharmaceutical market is crowded and competitive.
Yeah.
So they need to constantly find ways to differentiate themselves and offer unique value to their customers.
That makes a lot of sense.
Yeah.
Speaking of competition,
Okay.
where does JB Chemicals stand in relation to its peers in the Indian market?
They're generally considered a mid-sized player.
Okay.
However, their recent growth has been so impressive
Right.
that they're closing the gap on some of their larger rivals.
It sounds like they're punching above their weight,
They are.
which is quite impressive. Their strong domestic performance and strategic acquisitions have put them on the map.
They've certainly made a name for themselves, but they can't afford to rest on their laurels.
Right.
The pharmaceutical industry is incredibly dynamic and constantly changing. They need to stay focused, adaptable, and committed to their long-term goals
Right.
if they want to maintain this upward trajectory.
I'm sure our listener who has been diligently poring over these financial statements and investor presentations
Right.
is eager to hear what key takeaways they should be focusing on.
Okay.
What are the most important insights they should glean from all this information?
Well, first and foremost,
Yeah.
they should be encouraged by JB Chemicals' overall performance.
Right.
They're a company on a solid growth trajectory, and they're making smart choices that are driving profitability.
Their dominance in the domestic market is definitely something to be excited about.
It is.
They're outperforming the market by a significant margin.
Right.
And they have a portfolio of brands that are clearly resonating with Indian consumers.
Their strategic acquisitions have also played a crucial role in their success.
Yes.
They've demonstrated a knack for identifying and acquiring brands that complement their existing portfolio and can be swiftly scaled up.
And let's not forget their commitment to sustainability.
Right.
They're taking concrete steps to reduce their environmental impact and create a more sustainable future, which is very encouraging.
It speaks volumes about their long-term vision and their commitment to responsible business practices.
Exactly.
They're not just chasing profits,
Right.
but also striving to make a positive impact on the world.
It paints a positive picture.
It does.
But as with any investment,
Yeah,
there are always risks to consider.
absolutely.
Right.
It's essential for our listener to do their own due diligence and carefully evaluate the potential risks and opportunity
Right.
associated with investing in JB Chemicals.
Okay.
They should consider factors such as the competitive landscape, potential regulatory changes,
Yeah.
and the company's ability to execute its growth strategy effectively.
That's sound advice.
It is.
Investing always involves a degree of risk.
Right.
So it's vital to be informed and make educated decisions. But from what we've seen, JB Chemicals appears to be a company with a bright future.
Indeed. They have a lot going for them.
Yeah.
But ultimately, their success will depend on their ability to remain adaptable,
Okay.
innovative, and focused on their customers.
Well said. It's going to be fascinating to watch their journey unfold.
I agree.
Now, let's delve into some of the specific questions our listener sent over.
All right.
They seem particularly interested in understanding the company's operating expenses and margins.
That's a great area to explore further.
It is.
Understanding a company's cost structure and its ability to manage those expenses
Yeah.
is crucial when evaluating its financial health.
Let's start by examining their gross margin.
Okay.
They reported a gross margin of 66.2% in Q2 FY25,
Right.
which remained consistent with the previous quarter.
Okay.
However,
Yeah,
there's an interesting detail here.
you're right. If we exclude their ophthalmology business,
Mm-hmm.
which typically operates on slightly lower margins,
Right.
their gross margin actually improved by over 150 basis points. This suggests they're effectively managing their core business costs.
That's an important distinction to make.
It is.
Sometimes focusing solely on the overall numbers can be misleading.
Right.
It's crucial to dig deeper and understand the factors driving those numbers.
Precisely.
Okay.
In this instance, the consistent overall gross margin
Yeah.
was influenced by the inclusion of their newly acquired ophthalmology portfolio.
Right.
While this acquisition holds great promise,
Mm-hmm.
it doesn't yet command the same profit margins as their more established businesses.
So, excluding the ophthalmology business,
Yep.
their gross margin is actually trending in a positive direction.
Right.
What about their operating expenses?
Okay.
Have they managed to keep those under control?
They have indeed.
Okay.
They've managed to keep their operating expenses, including employee costs, in check.
Right.
This has been a key factor in maintaining their strong operating margins.
It's impressive they've achieved this.
It is.
Despite the inflationary pressures and external market uncertainties we've seen recently,
Yeah.
it points to a disciplined approach to cost management.
Yes, they seem to be quite cost-conscious. They've mentioned implementing various cost optimization initiatives
Right.
across their operations,
Okay.
and it seems those efforts are paying off.
There is one area, however,
Okay.
where they are facing some cost pressures.
Right.
Their international business.
Okay.
They've highlighted that freight costs continue to be elevated
Yeah.
for their international operations.
That's a common challenge for companies operating in the global marketplace.
It is.
Supply chain disruptions.
Mm-hmm.
And the rising cost of fuel have pushed up transportation costs worldwide.
It's certainly a factor they'll need to monitor closely.
Right.
If freight costs continue to rise,
Yeah.
it could potentially impact their international profit margins.
You're absolutely right.
Yeah.
They'll need to keep a close watch on the situation and explore strategies to mitigate those costs.
Okay.
They might consider negotiating better rates with shipping companies,
Right.
optimizing their shipping routes to be more efficient,
Yeah.
or even exploring alternative transportation modes.
It sounds like they have their work cut out for them.
They do.
So, to summarize,
Okay.
JB Chemicals is demonstrating good cost discipline and successfully managing its operating expenses.
Right.
However,
Yeah.
they are facing headwinds in their international business due to those elevated freight costs.
Overall, their financial performance suggests they're a well-managed company
Okay.
with a solid understanding of their cost structure and a clear commitment to profitability.
It's reassuring to see they're not just chasing growth at any cost.
Right.
They're focused on sustainable, profitable growth. And that's a key takeaway for our listener.
Yes.
Now,
Okay.
let's delve into some other financial metrics that our listener is curious about. They've specifically asked about the company's depreciation expenses and finance costs.
Excellent questions.
They are.
Their depreciation expenses remained relatively stable in Q2 FY25,
Okay.
coming in at around 42 crore,
Right.
similar to the previous quarter.
Okay.
This aligns with their investments in property, plant, and equipment.
They have been investing significantly in their manufacturing facilities and infrastructure to support their growth, so it's understandable that their depreciation expenses would reflect those investments.
Yes, it's a natural consequence of expanding their operations.
Right.
As long as these investments translate into increased production capacity and efficiency,
Right.
it's a positive sign.
Now, let's talk about their finance costs.
Okay.
Have those been fluctuating?
Actually, their finance costs have decreased significantly,
Really?
dropping to 2 crore in Q2 FY25.
Wow.
compared to 10 crore in the previous year.
Okay.
This is primarily due to a reduction in their gross debt.
It sounds like they've been actively paying down their debt.
They have.
And as a result, their interest expenses have decreased.
Right.
Which is a positive sign for their overall financial health.
It certainly is.
Yeah.
It indicates that they're managing their debt responsibly and reducing their financial leverage.
Speaking of debt management,
Okay.
their balance sheet is looking quite strong.
It is.
They reported a net cash position of 339 crore
Okay.
as of September 30, 2024.
Right.
That's a significant improvement from their position just a few months ago.
Their strong cash flow generation and their commitment to debt reduction have placed them in a very favorable financial position. They have the resources to invest in future growth,
Right.
pursue strategic acquisitions, and even weather any economic storms that might come their way.
It sounds like they're building a financial fortress.
They are.
This position of strength should give investors confidence in their ability to navigate future challenges.
It's a testament to their financial discipline and their dedication to building a sustainable and profitable business.
Right.
They're clearly playing the long game and doing it well.
Now, let's shift our attention to their cash flow statement.
Okay.
They reported strong operating cash flows in the first half of FY25, totaling 378 crore.
That's a healthy number.
It is.
Although it's slightly lower
Okay.
than their operating cash flows for the same period last year.
Right.
The decrease is mainly attributable to higher cash tax payments
Okay.
and increased inventory levels.
They mentioned they've been strategically building up their inventory in anticipation of potential increases in API costs.
Right.
They're also ensuring they have enough stock to support the growth of their ophthalmology portfolio.
That's a prudent move,
It is.
especially considering the current inflationary environment and the uncertainty surrounding global supply chains.
Right.
It makes sense to ensure they have enough inventory to meet demand.
It's a classic balancing act. Right.
You don't want to tie up too much cash in inventory,
Yeah.
but you also don't want to be caught short if prices rise
Right.
or if there are disruptions in the supply chain.
Exactly. It's a delicate dance.
Yeah.
And JB Chemicals seems to be managing it well. They're striking a balance between maintaining operational flexibility
Right.
and optimizing their cash flow.
So their cash flow generation remains strong.
Yeah.
And they have a healthy cash position on their balance sheet. They're also investing in their future growth
Yeah.
and managing their working capital effectively.
From a financial perspective, they're ticking all the right boxes. They have a solid foundation for continued growth and expansion.
Before we move on, I want to circle back to their sustainability efforts.
Right.
We touched on it earlier, but I think it's worth emphasizing how seriously they're taking this aspect of their business.
You're absolutely right.
Yeah.
Their commitment to sustainability is not just a public relations move.
They've integrated it into their core business strategy.
They've set some ambitious goals, including achieving carbon neutrality in their direct operations by FY33.
Wow.
And relying entirely on renewable energy by the same year.
Okay.
These are bold targets.
Yes.
And it shows they're not afraid to think big and make a real difference.
They're walking the walk, not just talking the talk.
Exactly.
They've already made significant progress in reducing their energy consumption and emissions.
Right.
And they continue to invest in renewable energy sources.
It's truly inspiring to see a company prioritizing both financial success and environmental responsibility.
It's a win-win situation.
It is.
Their sustainability efforts benefit the environment and enhance their brand image, appealing to a growing segment of consumers who value ethical and sustainable business practices.
It's clear they're not just chasing short-term profits. They're building a business for the long haul.
Right.
A legacy they can be proud of.
Right.
Now, let's move on to our listeners' final set of questions, which focus on the company's growth strategy and future outlook.
Right.
This is where things get really interesting.
You're right. JB Chemicals has been on an incredible growth trajectory in recent years.
Yes, they have.
And they've outlined some very ambitious plans for the future.
They've made it clear that their domestic business will remain a key driver of their growth.
Okay.
They're aiming to consistently outperform the market and increase their share of the chronic therapies market.
That makes sense.
It does?
Given their already strong foundation in the domestic market,
Right.
their business in India is growing at a rate nearly twice that of the overall market.
Right.
And they have a robust portfolio of brands poised for continued success.
They've also identified several key growth drivers,
Okay.
including expanding their presence in those high-growth therapy areas, leveraging their strong go-to-market model, and continuing to invest in brand building and lifecycle management.
That's right. And they're also looking to expand their international presence.
Okay.
Both through their CDMO business and their formulations business.
Right.
They've set a goal for their India and CDMO businesses to contribute around 75 to 80% of their total revenue in the medium term.
They're not content with just being a major player in India.
No.
They have global ambitions,
Right.
and they're making strategic moves to achieve those goals.
Their CDMO business in particular has significant growth potential.
Okay.
They're already a leader in the lozenges market.
Right.
But they're actively seeking to expand into new product categories and geographical markets.
They've also hinted at potential acquisitions in both existing and new therapy areas.
Oh, interesting.
They have a proven track record of making smart acquisitions.
They do.
So it will be interesting to see what targets they pursue next.
Their acquisition strategy has been a key driver of their growth.
Yes.
And it's likely to play a vital role in their future success. They've shown they have an eye for identifying and integrating companies that align with their vision and growth strategy.
So they have a clear vision for the future.
They do.
And a well-defined growth strategy.
Right.
But as with any business,
Yeah.
there are always challenges and uncertainties to navigate.
Of course.
Right.
They'll need to be adaptable and responsive to changes in the market and the competitive landscape, which is always in flux.
Right.
They'll also need to be mindful of potential regulatory changes.
Yeah.
And any economic headwinds that might arise.
They're operating in a dynamic and ever-changing industry.
Absolutely.
To succeed, they'll need to be agile, innovative, and maintain a strong focus on their customers' needs.
Absolutely. But they have demonstrated these qualities in the past. And there's no reason to believe they won't continue to do so in the future.
They have a strong leadership team, a talented workforce,
Right.
a solid financial foundation, and a clear vision for where they want to go. It seems they have all the ingredients for continued success.
It's a truly exciting time to be following JB Chemicals.
It is.
They're a company on the move, making a real impact on the pharmaceutical industry.
They're definitely a company to watch.
Yeah.
Their journey is far from over.
Right.
And their next chapter promises to be just as compelling as the last.
It will be.
But for now,
Yeah.
let's take a moment to gather our thoughts.
Okay.
And come back refreshed and ready to tackle the last leg of this deep dive into JB Chemicals.
Sounds good.
All right, we're back ready to tackle those burning questions you had.
Right.
We've covered a lot of ground already.
We have.
So let's see how it all connects and what insights we can glean for you.
You mentioned some concerns about the impact of external factors on JB Chemicals' performance.
Right.
Things like fluctuating market conditions.
Yeah.
Or those pesky raw material costs everyone's been talking about.
It's like trying to build a house in the middle of a hurricane sometimes, you know?
No, right?
With all these economic ups and downs lately.
It's true.
So how has JB Chemicals managed to weather the storm?
Well, they've actually shown impressive resilience,
Okay.
which is a good sign for any investor.
Right.
They've been proactive in a few key areas.
Okay.
For one, they've been very strategic about their pricing.
Okay.
They've selectively raised prices in certain markets to offset those rising input costs we talked about.
That makes sense.
Yeah.
If the cost of ingredients goes up, they need to adjust their prices to keep making a profit?
Exactly. But they've been smart about it.
Okay.
They're not just hiking prices across the board.
Right.
They're focusing on markets where they have strong brand loyalty and where customers are less likely to be scared off by a small price increase.
So it's a delicate balancing act.
It is.
They need to protect their profits.
Yeah.
But they also don't want to lose customers to competitors.
Right. Another thing they've been doing is focusing on their supply chain.
Okay.
They're working directly with their suppliers to get better deals and ensure a steady flow of those raw materials.
Oh, yeah, those material availability issues we talked about earlier.
Exactly.
It sounds like they're taking those challenges seriously.
Absolutely.
Yeah,
Supply chain disruptions are a huge headache for businesses these days.
I bet.
So companies that can figure out how to navigate those issues have a real advantage.
Right.
JB seems to be doing just that.
Okay.
They're even exploring new sourcing options.
Okay.
So they're not reliant on just one supplier.
It's like diversifying your investments,
Exactly.
but for ingredients and supplies. spreading out the risk.
Yeah, and this all plays into their ability to manage those rising raw material costs.
Okay.
But they've also benefited from something called a favorable product mix.
Okay, I have to admit, I'm not familiar with that term.
Oh, sure.
What does favorable product mix mean?
Essentially, it means they've been selling a higher proportion of their more profitable products.
Okay.
Think of it this way.
All right.
If they sell more of the products that make them the most money, their overall profitability goes up,
Right.
even if they're facing cost challenges on other fronts.
So it sounds like it's a combination of smart strategies
Yeah,
and maybe a little bit of luck that's helped them stay strong in a turbulent market.
exactly. They've made some smart moves, but they've also caught a few lucky breaks.
Right.
And it's clear they're not just sitting back and reacting to whatever happens.
Right.
They're anticipating challenges and planning for the future.
Mm-hmm.
That kind of forward thinking is essential for long-term success.
Speaking of the future,
Yeah,
you mentioned research and development earlier.
I did.
Our listener is curious about their R&D spending and what it might mean for their future growth.
They haven't publicly released specific figures on their R&D spending in their recent reports.
Okay.
However, they have emphasized that innovation is absolutely central to their growth strategy.
Okay.
They're actively exploring new product development opportunities, especially in their CDMO business.
Right.
And remember, they're interested in expanding into those high-growth therapy areas,
Right.
which will likely require significant investments in R&D.
So even though we don't have exact numbers,
Yeah.
it's clear they're not neglecting this crucial aspect of the pharmaceutical industry.
Right.
Yeah.
They understand that in this industry, you either innovate or you stagnate.
It's true.
Companies that don't invest in R&D risk falling behind and losing their competitive edge.
Right.
JB Chemicals seems to get that.
It's a tough balancing act, though, isn't it?
It is.
They need to invest in future growth,
Yeah,
but they also need to manage their current profitability.
absolutely. It's a delicate dance.
It is.
And it'll be interesting to see how they prioritize these competing demands in the coming years.
Right. Well, from everything we've seen today,
Mm.
it seems like JB Chemicals is firing on all cylinders.
I agree.
Strong financials, strategic acquisitions, a commitment to sustainability,
Yeah,
and a clear vision for their future.
absolutely.
They're a company on the rise.
I agree. They're definitely a company to keep an eye on.
They are.
They're making smart decisions, executing their plans effectively,
Mhm.
and they seem to be well-positioned for continued success.
It's been a fascinating deep dive into their world.
It has.
And I hope you feel like you have a much better understanding of what makes JB Chemicals tick.
I think so.
But remember, our analysis is just one piece of the puzzle.
That's right. Don't just take our word for it.
Right.
Keep digging, do your own research, and consider all perspectives.
Exactly. Stay curious and keep asking questions.
Yes.
Who knows what you might discover? That's all the time we have for today's deep dive.
Okay.
Until next time, keep exploring.